Hey everybody, welcome back on the Blockworks Macro YouTube channel. This is Alf speaking, and the guest of today's show is Jared Bibler. Jared is the author of Iceland's Secret, the untold story of the world's biggest con. That's quite a title, Jared. Welcome to the show.
Hey, thanks so much for having me. I really appreciate that.
So today we're going to have a chat about Iceland, and people would be like, what? But actually, you told me before the show that there are quite some parallels and similarities and implications with what's going on with some of the cons that we are seeing, namely FTX, for instance. But tell us this story about Iceland to start with.
Well, let me give you a thought experiment first. On the 27th, you wrote an article called All They Told You About Money Printing is Really, Really Wrong, which was an excellent article. You have to correct me if I misquote you. But the piece of it that I wanted to focus on was that commercial banks and governments, but let's focus on commercial banks. Commercial banks create real economy money, like via loans, like mortgages, car loans, credit card debt, whatever. Now imagine if, just a thought experiment, all the major commercial banks in your country stopped creating real economy money that way. And they directed all of those new loan funds, every single euro or whatever currency you want, dollar, every single currency, they started directing all of that money into offshore shell companies. And they started using that real economy money, which is now no longer real economy money, I think we can agree. Those shell companies offshore become the holders and the owners of their own equity.
Okay. That's
Iceland starting in late 2007. So well before the Lehman moment and all that stuff that happened in 2008. The commercial banks effectively, they had so many of their own shares to offload at the end of each quarter that Enron style, they would stuff them in whatever envelope they could off the balance sheet. And they would use their own money creation ability to finance the purchases.
Oh my God. Okay, let me see if I got this roughly right. But we need to explain piece by piece.
Yes.
So we are in Iceland. We are before the great financial crisis. It's 2007 roughly.
Yep.
And you have Icelandic banks, right, Jared? And go ahead.
You're living in Iceland and you have a great job and your wife has a great job, good salaries. You have a small house. You pay all your mortgage payments. You want a slightly bigger house. And you're an employee of the bank, right? So you have even more preferential credit terms. You go to the bank and you say, I'd like a mortgage, a slightly larger mortgage to get into this other house. You also have money to put down, all that. You meet all the criteria. And they say, no. And you think that's weird. But then you find out later, nobody gets a mortgage. They stopped. There was no lending happening in the domestic economy, really. Starting sometime in, I haven't looked at this graph in a while, but this is late 2007. The banks stop lending at all into the housing sector. It goes off a cliff. Okay. So go back to you. You can walk us through it.
No, I was thinking, okay, so I'm in Iceland. It's pre-great financial crisis. I'm trying to get a loan from a bank. I'm trying to get credit creation on my balance sheet. I want to actually spend more money that I have. I want new money being created, leveraged on my future cash flows, salaries, earnings, whatever they are. And the bank goes like, nope, because we're busy doing something else. So Jared, now walk us through what this else is, because it sounds pretty interesting.
Okay, so I'll flash you into a personal story. 2009. Imagine you're the first investigator at the newly hired by the regulator. So that's the ESMA or whatever they're called today, whatever, FCA, whatever they're called, regulator in your country. You come into the regulator, they say, and now the system has crashed. Now the supermarket shelves are bare. Now the inflation is 20, 30%. Now now your mortgage payment has doubled, et cetera. We can get into all that. But okay, now things are very dire. And you come in there, and what's greeting you is a letter. And the letter is 6 months old or 4 months old. And the letter is from the stock exchange to the regulator. And the letter says, hey, we noticed some strange trading behavior. We noticed that just 3 days before each of these huge banks collapsed. Now, the banks, by the way, are together 11 times bigger than the country's GDP. Each one is the size of Enron. Enron's back in the news now because it's famous, right? It was huge news in the US. There was a 200-person task force of FBI agents and SEC people and DOJ people who spent like years unlocking that thing. Iceland had 3 Enrons, but with 1,000th the population. And so now you come into the regulator and they give you this sheet, and it's a 3-page letter. And the letter says, we noticed some strange trading on these 3 days. We noticed that each of these banks had one trader. We think he was using the bank's money. And that trader bought every share that came across the public stock exchange so that the price wouldn't go down, so that the price never dropped. So any seller who comes to the exchange with a share of the bank's stock, there's a buyer there. The buyer is the bank with the bank's proprietary funds. But just for those 3 days. Then you start maybe digging in, you crack open your Excel spreadsheet, you get some more data, and you realize that this has not been going on for just 3 days, but actually it's been going on for like 2 weeks, back to Lehman. But then you're like, let me find out when this went, maybe a little further back. Maybe this went back in the summer. So you go back maybe 6 months, but you see that actually for the whole 6 months as the 2008 was unfolding, they were doing the same thing, all 3 banks. So then you get really bold and you say, I'm going to go back 5 years. And you see that basically the pattern had always been going in some form. The volumes that the banks bought of themselves went up the more trouble they got into. But through all those years, they're doubling their balance sheet. They're doubling in size. They're going out to Europe, to bigger banks, bigger entities all over the world and borrowing to lever themselves up. And they're pointing to their great share price performance as a reason that you should trust them. But in the background, they're creating that share price out of thin air. Now imagine that those 3 banks are so much bigger than everything else in the country's economy that they become the whole stock market, or virtually so. So they become 75% of the market index. And tangentially, maybe even, it's like when they crash, the market loses 97% within a few months. So that's the story.
Oh my God, Jared. So let me try and think how this would work mechanically.
Yes, please.
So every time a bank makes a loan, they literally create money out of thin air. They credit an account of somebody, and they create new deposits for the system on the liability side. Now, if this deposit ends up at the same bank, it's fair and square. You created new assets, you created a new deposit, you're squared. And if deposit ends back at your balance sheet, that's all fine. If the deposit doesn't end at your balance sheet, then you need to find some source of funding somewhere, right? That's how it works. Mm-hmm. Now, there are 3 major large banks in Iceland, you said, like they're really big. They dominate the market. So it's a pretty closed and small system overall. What they can do is they can credit their own trader's account, basically, and say, hey, there you go. This is new money being created. This is your funding.
Well, what they can do is, because they're still much smaller than, like, let's say a Deutsche Bank, not to pick on them, but we should pick on them because they were one of the biggest lenders to Iceland. When you're especially smaller bank growing and everyone perceives your country as clean and wonderful and green, the Germans lent a lot into those banks. So for at least a few years, they could basically tap as much international cash. And also another macroeconomic thing you might find interesting is that the currency was newly floated in 2002. So before that, you couldn't trade ISK. You had to go there as a visitor and buy some physical ISK. But after 2002, you could trade it. There was FX pairs on it. So that meant there was suddenly demand because this was a high inflation, high yielding currency. So, and this was during the Greenspan, 1% years. So there was a lot of search for yield. So there was a lot of money flooding in for a short time, a few years, money flooding into the country, pushing up the exchange rate. And so for just a couple of years anyway, 3-4 years, those banks could borrow almost virtually unlimited amounts of funds. So they had cash on hand to actually buy their own shares. And any seller who comes to the market, the bank has borrowed cash. It can use, that's a real trade. That's really money out the door. In the last year, they each spent around $1 billion just in this tiny stock market in Iceland because they had to buy virtually the whole market volume, or a significant piece of the market volume.
But this was done via external funding, you're saying. So this is money flowing into Iceland.
The money to finance the buying, yes, I believe so. However, imagine you're that prop trader and you've spent whatever, hundreds of millions that quarter. And in many cases, by the way, you are directly in contact with the top people in the bank, CEO, daily reports. Hey, boss, we bought so much, we bought this much. Price didn't move, that kind of stuff. You now have a problem as the head of the prop desk because you're sitting on your whole trading portfolio, which is supposed to be like good trades that you did. Your whole trading portfolio. Now, this is where it's like FTX. FTX is sitting on its own FTT token as its balance sheet, Icelandic Bank is sitting on its own now, maybe 5-10% of its own outstanding shares have been bought just that quarter. Now it's sitting on them. It's never announced this to the market as a buyback or anything. So it can't dematerialize those shares. What's it going to do? It's got to get rid of them somehow before the auditors come in. As sleepy as they are, there are auditors in Iceland. And so what are they going to do? So this is where the loan piece comes in. Because now if you're a bank, you can now loan someone money to buy those shares from you. This is also very FTX-like, right? So the loan book over time, especially in the last year, it just becomes BS loans to companies you've never heard of. And the loan is 100% collateralized by the shares.
Okay, that's how it goes.
Yeah.
So they first started with external funding, a bit like, and we're starting to draw parallels with FTX, right? So basically, FTX attracted new customers as the crypto world was growing very fast, and they attracted a few billions of customers, and this is external funding, basically speaking, right? And then they started using these external customers misappropriating funds here and there, as we are figuring out today. That's how it started. And in Iceland, the parallel is the same. So external money from Europe, maybe, or the US was funding Iceland because they were looking for yields and a stable country where to invest. So banks started using this money and misappropriated, one can say, external funding by buying back their shares without announcing it to the public. So they were basically supporting their own shares. And then at some point, they wanted some credit creation mechanisms to back that up. So they were lending to shell companies, which were basically non-existent businesses, 100% collateralized by the same shares that they had bought.
Yeah. So their business as a bank over time becomes completely corrupted into this mechanism. So because a bank's assets is its loan book. It's supposed to be good loans. You're expecting to get profit. You're expecting to get paid back, on those. These loans would be, they had no periodic P&I payments. There was no monthly payment on these loans. They would make a loan that would be like a 5-year bullet loan so that all the principal and interest came due on the last day. And some of those loans could be for $200 million dollars in one go.
Oh God.
And so imagine if this was legit. Imagine if an investor came into to a Nordic bank with 200 million and wanted to buy equity. I mean, that would be in the FT, right? That'd be, so-and-so comes in, right? These things were never announced.
So, Jared, before we jump into what happened when the whole thing blew up, can you tell me how do you see the parallels with FTX precisely? So the Icelandic bank activity at the beginning and towards the end of the scheme, how does it resemble exactly what FTX was doing at the beginning and towards the end of the scheme?
Well, I'm not an FTX expert. I've been following it a bit on Twitter, but I want to make another parallel for you. Like I said, at first these were big lenders who should have been sophisticated, like Deutsche Bank and other pension funds and so on, who were lending into those banks. But after 2006, there was actually some exposure of the problems of Icelandic banks in the mainstream press outside of Iceland. So there was actually, the IMF did a big report on Iceland, summer of 2006. And there was a couple of, I think Merrill Lynch did an analysis, Danske Bank, and they said, look, how are these banks making money? Look at how they're funding themselves. They had to roll over at that point in 2006. they had to roll over a whole GDP of Iceland worth of funding, with it by the middle of the next year. They had to roll over like, I don't know, 15 billion. When they collapsed, they were $182 billion together, their balance sheets. So that was the time when maybe a collapse could have happened. Then and this is FTX-like, then they went retail. They used EU legislation, which allowed them to open passbook savings accounts in various countries. And then they collected retail deposit money to keep the funding base growing and to keep themselves in business. Now, those people were bailed out in most cases by the deposit insurance. So that's not like FTX, obviously. But the sort of chasing money wherever you can get it to to inflate your scheme is very FTX-like, I think.
Yes. So I think at the beginning, getting customer money, growing the business via a bunch of advertising, for instance, where FTX was very strong, and Iceland was instead very strong with finding legal loopholes and having yields that were very attractive for foreign investors, right? That's why I remember in the Netherlands back then, it was quite a thing to allocate into an Icelandic bank account because it was yielding much more than your Euro bank account, right?
Right.
And it looked like the currency was pegged, or it was even appreciated.
It was
on
appreciated.
a continuous basis.
It was.
Against the Euro. So what a fantastic deal.
Yeah.
And a lot of people did that. On top of it, later on comes basically the lending collateralized by your own pumped up collateral, basically your own shares. And that's very similar to what FTX was doing towards Alameda Research, for instance. So basically lending collateralized by their own tokens.
Token,
It's a very similar story.
Yeah.
And then it falls apart. Now, before we go into the falls apart section, Jared, just a reflection from my end. These things keep happening over and over again, and we keep forgetting. I mean, I tweeted the other day, in 1989, the Imperial Palace of Tokyo was valued more than the entire state of California.
Yeah, that's right.
I'm sorry, what?
Yeah.
And that was the private sector bubble, private real estate bubble in Japan. We did, again, a similar story in 2006, 2007 in the US, where people had 5 mortgages, no income, no jobs, kind of mortgages. I mean, we keep doing these things over and over again. And we did it in Iceland. Now we do it in FTX in a very similar fashion.
Yeah.
Why is that the case?
I'm sad to say this, and this is just, I may be a bit like Donald Trump in that the last thing someone said to me is the thing I repeat. But I was just before we went on, I was having a conversation with someone who's an Icelandic citizen who lives she lives in Asia. And she's kind of like, because actually there's big news 2 weeks ago today, I believe. There was an auditor's report. One of these banks is being privatized again now this year. And the scandal around that is it stinks to high heaven. Again, now the government owns the shares again, and the government's passing them out to friends and family of powerful people in the government, it appears. At least partially. And I don't think we have time to get into that, but it's still happening even in Iceland. And I think, I was saying to her just now, I think, unfortunately, the public is who needs to protest these things to fix them. But the public often loses interest because these cases are so abstract. Like if I break into your house and steal your computer, you go to the police and you demand, you say, do you have any leads? Can you find this for me? But if I go into your pension fund and steal something that's 20 times, you would never even notice that. We've never lived, let me put this point to you. We've never lived in a world without a high level of financial corruption, financial fraud. We don't even know what world we could have because we've never really fought it the way we could. We fight it in cycles, but notice we always go after things after they've collapsed. Who was going after FTX, a month, 6 weeks ago? Nobody. And some of these fraudsters are lucky enough to outgrow the fraud and for the fraud to become a company that works, right?
I really like this tagline, for the fraud to become a company. What was the thing? fake it until you make it.
Yeah. A lot of the world works that way, unfortunately. But maybe fortunately, maybe that's how it's supposed to work. But I don't like, so one more FTX parallel, so imagine if those FTT, those junk tokens that FTX issued, imagine if that was the whole stock market of your country, was just FTT. All your pension funds legally had to, they're going to be 50% equity or whatever. It's something close to that. They're going to have 50% of your hard-earned salary over many years in that bullshit FTT token, right? That's the Iceland case. So when the stock market loses 97% of its value, guess what happens to our pensions? Guess what happens to our savings? And by the way, personally, I didn't really trust I worked for one of the banks and I quit right before the crisis, luckily. But I never bought shares. I didn't really trust the bank shares. However, I put my cash in a money market fund, which yielded more than a savings account. But what we learned later was the money market debt was these junk satellite companies around each bank holding their shares. So
there you go.
I was buying the shares and didn't even know it.
It was so deep and profound, basically, as it permeated every financial aspect of the Iceland financial sector. So there was no way out. I mean, if you wanted to be within the financial system in Iceland, you were basically. Yeah. So it was an FTX case to the extreme, I think, but it still shows that we keep repeating the same mistakes over and over again.
Yes.
And that's just how the system apparently works. Jared, this has been a very fascinating story. There is just one thing I'd like to hear a bit more is how does it end?
I mean, it's not a happy ending. I'll give away. It's not a very happy ending. The public was really enraged, of course. A lot of us, we eventually lost our house as well. And, our pension funds mostly decimated and a lot of our just cash savings, which wasn't much, but also gone. But that was not just us. That was most of our friends and, anybody outside of, let's say, the top 5% of wealth in the country was suffering like that.
Wow, that's big.
Yeah.
And this goes to show the importance of banks. I mean, they should be highly regulated entities, and regulation is not always seen with a good eye, but it can help fight these kind of frauds.
Yeah, but the regulation has to be smart. It has to be looking for frauds. It has to be looking for crimes and trying to take them down. It can't be about checking boxes. And since 2008, we just got a lot more boxes to check and everyone's complaining. And I don't blame them for complaining. It's silly. It's a waste of time. But there's nobody, if you go to any regulator, I challenge you, name me a regulator in the world where if you would go to them today and say, I have a $5 billion fraud here I just discovered in this bank in your country, who's going to take it? They will walk out that conference room door as fast as they can because those aren't the people. They don't have a team. When you go, when the police hopefully find out about a kidnapping or murder or something serious, child is missing, they have people who know how to research those things, know how to handle that situation, know how to do hostage negotiation, all that stuff. They're good at that. But regulators don't have a SWAT team for financial crime. Every time something big happens, they have to rediscover. And then what happened to us in Iceland? So, like I said, the public lost everything or most of everything. So people were angry. So there was pressure, political pressure on the streets. People wanted change and we had it. So we had enough juice, enough wind at our backs to start investigating, which is the story I told you of finding the letter, finding this stuff. Otherwise, that would never have been scratched. We never would know this story. But what happened is after just very few months, like 18 months, they started to dismantle the whole thing. So that today, I don't believe Iceland has any enforcement capability at the regulator. They don't have a special investigation team. We had a great team. We had people who knew how to do email forensics. We had, people much better than me doing trade analytics and stuff. That's all gone. So there's no prep. Now there's been a big banking share scandal this year. I don't know who's investigating that there. They've lost all that capability.
Jared, such a fascinating story and also so remarkably important for understanding how frauds can be set up and how they keep recurring over time, over and over again. These story is actually at the epicenter of your book. So if people want to hear more about this story, you maybe read your book. Tell us a bit, where can they find you?
I mean, Iceland's Secret is everywhere you can get books, of course, Amazon. I did an audible reading for it. So if you like my voice on this interview, I have a little bit of a cold. The reading voice is better. So yeah, it's audible. It's amazon.com and your local independent bookstore, probably preferably, but,
Jared, what a very fascinating story. And I hope people here on Blockworks Macro YouTube channel appreciated hearing it and seeing the parallel with some of the frauds and Ponzi schemes that we have seen recently, and also learn some lessons maybe by reading your book and listening to this conversation for the future. Thanks for being with us.
Thanks so much.